Hey everybody, welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great long weekend. We are here to kick off what we do each and every day, taking a look at the same 10 to 12 futures markets. And the key is we leave the lines on the charts. That's a hope to get your day off to a running start. So let's go ahead and get rolling into it. When we look at the markets, what it did kind of over the holiday weekend, we are continuing the pullback that we started on Friday. Those of you that follow the Twitter feed, I talked about on Friday, I fully expected a little bit of a profit-taking pullback heading into the weekend. And that's kind of what we got. We got a little bit of a pullback heading into the weekend. I didn't exactly talk about where that pullback was going to occur. I just kind of felt like it was going to be there. So not to say that there was much of a trade to be had on that thing, but we did get a bit of a pullback on that. So looking at that, I can see that in the overnight hours, we broke through what could be considered, just call this a traditional support line. Right here, we've just kind of broken through this traditional support line, which, if you're really looking at this kind of a price pattern here, I think that there's a chance that we'll continue to fall into our buying area down here. We could also very well stop at around 2,700, just simply whole round number support in there. Our big picture direction, if I look at the big picture on the daily chart, we did get a higher swing high, but our Friday candlestick was indeed a very strong reversal candlestick. So this is a reversal pattern candlestick, and a nice little pullback would be down into here. Now, I don't really spend too much time doing, fib measurements and extensions and things along that nature. But this pattern here, if you will, would set up well if we pulled back to here. This would set up well for a retest of the all-time back to our all-time highs. This is actually a very normal and healthy pullback if we pull back to here. Now, if we start to get below this area here, then that would be something to be a bit more concerned about, because that would mean that we're kind of more in a basing scenario, because we would just kind of be in between this big range. So I look at this area here as a potential reversal point on kind of a bigger picture scale. Now, if you're trading on the smaller time frame and you want to maybe make a little bit of profits as it does indeed come down, I think you're going to get a little bit of an entry point right here if we get a retest back up into this area. So hopefully I'll get the video out before that happens. You may get a little bit of a retest of this area here for a potential short, for those of you that are interested in shorting right through here. We're far enough off the all-time high that it's okay to short. And once again, this is a very small time frame level, so you take a bit more risk anytime you go to those smaller time frames. Looking at the NQ, so the NQ has actually come down into an area that we identified could be a potential 15-minute reversal period. I am not a huge fan. The arrival was pretty strong, but I'm not a huge fan of what we're doing inside this price action. So, your profit target would have to be right up here, as this is your first opposing area. So just kind of keep this area in mind. If we do get a little bit of a bounce out of here, which would take us to that level of resistance that I talked about in the S&P, we could get a bounce up out of this selling area here. Looking at crude oil. So crude oil on the daily, let me go back to the 1 hour chart. So crude oil on the 1 hour chart, we had talked about a potential breakout long up above this area here. Now, depending on your time frame, and this is why time frames are always very important, we are right now since Friday, kind of just basing around here in crude. And depending on your time frame, you may or may not really be a huge believer in this breakout long. If you're looking at a bigger picture scale, right, weekly, daily, 4 hour, then we are still kind of in a bearish mode, right? If you're looking for very small time frame trades, you might actually have taken advantage of this little move back up. But I'm going to let oil be for the time being. There's really nothing in here for me to kind of jump all over at the moment, until I get a little bit more definitive picture in my, definitive direction in my big picture. We had the breakout above that area here, but it looks like that's not going to follow through. And so you could be out of that at about break even. So take a very small loss on that, because we're not seeing the follow through on that trade as of yet. Gold, looking at gold, we don't really have anything set up very close. Down here at 1300, we've certainly got an area in play. I like this area up here. Now, I don't know if we're going to get back to this area anytime soon, but this area up here is a pretty good little play. And the reason for that is because it acted as resistance through here, support back here. Now, once again, we know for certain that we can't cut through candlesticks, right? I can't. To find unfilled order flow, I can't cut through candlesticks, and I know that. But there is psychological reasons for people to add new orders at an area of where price has been in the past. And it's not just psychological, it's also a lot of the algorithmic trade will as well. So just keep in mind that although I understand that these, that the orders that created this no longer exist, and that is 100% accurate. The orders that created this move no longer exist. They were blown away when price went up through it, and then certainly when price came back down through it. So the orders that created this pivot no longer exist. However, there's psychological reasons for people to place new orders in that place, and that's really part of what I'm playing off of on this area up here in gold. Let's take a look at bonds. So looking here at our setup in the bond market, and I'm going to maximize this. So looking here at our 1 hour chart in the bonds, we have a potential reversal point higher here if you go to a smaller time period. There's really no reason for me to be a buyer at this time. I don't like these tiny candles. It's really hard to get much of a gauge off of, when you've got that limited market time from the weekend day, the holiday day, essentially to trade off of. So there's really nothing here that I'm gonna make a decision off of. But when I look at the 4 hour chart, I go to a bit bigger scale, we're just kind of continuing that downward trend. I got to go all the way out to a weekly to see where my next true support area is. And so I have kind of rotated out of bonds as far as for my longer term investment side, and looking at primarily shorting on a small time frame when prices do indeed rally. And so my next area, if you will, for a rally in bonds would be this area up here, if indeed we can make it back up to that range. Next is the Aussie. So the Aussie trade, we had the short off of the Aussie trade right here. That is still continuing its move down. So some of you hopefully were able to grab onto that Aussie position. I think you should have taken some profits off the table by now. If you have not, then I would certainly consider doing so, especially as we come into this little fair price area right there. I think that ultimately, though, we can continue to go down to this range in here, especially if we continue to see strength in the dollar. The euro, we're coming closer and closer to this euro level again, where we had caught a little bit of an entry off of there. I think it's still going to be valid. However, I'm going to change this to a dashed line. Slightly less probability in there. I'm also going to add, ooh, that's not what I wanted. I'm also going to add a potential entry here in the euro. Now, this is also going to be at a dashed line area. Now, why would I put this at a dashed line? Let me explain very quickly. So in this one, if I zoom in on this, what you can see is if hopefully you can see this big long wick right here. So what this tells me is that price came down and then went back up before then first coming down. If I go down to say a 15-minute chart, that'll be a bit more evident. Actually, we didn't come back down out of it too much. So when I look at that on the 15-minute, I don't like it anywhere near as well. Which is why it's in a dashed line. I don't love that area, but I like the area. Let's put it that way. So keep that area in mind for the euro. Canadian dollar. Canadian dollar, we finally got our breakout to the downside. Price came back up, and it almost got above our pivot. As I had said on the weekend edition, it looked like we were going to get stopped out. Remember, if you get the breakout, your stop goes above the prior pivot high. Did not quite hit that, and I fully expected, frankly, for it to fail miserably. But it's not. It's continuing its march down and still running. So hopefully some of you were able to catch that one and hold on while you took a little bit of heat. You definitely were taking some heat through here. But remember that those breakouts, you've got to place your stop outside of the prior pivot before the breakout. Let's see, Great British Pound, Japanese Yen. So our pound trade, we are almost to our potential pound entry. So let me maximize this and take a look at this again. And I had to have found that on the 15-minute time period. There's no way that that should be in green. That should be in purple. As I certainly just must have forgotten to change the color the last time we did the video. And it's in purple because that's found on a 15-minute chart. And remember that the 15-minute chart, always lower degree of probability. And the way that the Euro's falling, the Aussie's falling, the Canadian's falling, gives me another pause to take this long on the British pound. So just keep that one in your radar screen, but you may or may not take that based on your risk tolerance kind of coming into it. Japanese yen, we still have a breakout to the downside from here. If we break below here, this is our short in the yen. Copper, we had an entry set up way back here, got a good little short off of that entry, and now we're just, there's a number of different entries in here, but we're in a sideways price action, right? I mean, if you see, big picture, this is sideways back through here. We came down, we come back up, but on the 1 hour, this is just, fairly wide levels of chop. So you've got to go to a smaller time period to find some reversals. And that hourly chart is kind of a big deal. I'm going to highlight this little area right here. Now, this area here I'm highlighting simply because we're not getting a reversal out of it. We might get one, but I don't like the way that we're coming into it, the way that we're arriving into it. So it could actually be a potential breakout to the downside if we get below this area here. All right, so let me take a look. See, nat gas, last one. We're nowhere. We're almost getting to that area for a potential reversal point. Let's see if we get there later on in the day today. All right, well, that being said, I'm going to turn this thing off for today. Little bit of hopefully some interesting words of wisdom to look at. Remember, the S&P, we're down 17.5 points this morning in early morning trading, but could get a shot at another entry here soon. So keep your stops tight. Keep yourself nice and safe out there. If you got any questions, feel free to send me an email, chuck@iiefinancial.com. If you want, I don't know if everybody's aware out there, we have a podcast. It's called Chuck and Ann on Finance. We do a financial podcast every week. You can find it on iTunes, or you can just go to the website, iiefinancial.com, and take a look at and listen to the podcast in the media section. So hope everybody has a great day. If there's something I can do for you, give me a holler.